My name is Chris Campbell. I'm a practicing CPA, and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. Today should be a relatively quick one today. I received a call from a client asking about Section 179 deduction. Without trying to sound too tax nerdy about it, essentially what Section 179 does is allow you to purchase large pieces of equipment and essentially write off the full purchase price of the equipment in the first year that you bought it. Normally, when you buy equipment, you are supposed to write that off over the course of the use. So you write it off over multiple years. But using this particular deduction allows you to deduct the whole thing on the year. So it was popular with the deduction of writing off vehicles. Now it's writing off vehicles using Section 168. That's when you see all these folks talking about writing off the car 100%, yada, yada, yada. But that was a relatively new deduction. But prior to that, folks used this 179, which allowed you to an extent, write off the cost of entire vehicle. The client had reached out to me and they had wondered how can they use this 179 to deduct the purchase of a truck. They wanted to purchase a pickup truck. They wanted to use it in business, but they also wanted to offset income outside of the business. So he wanted to write off the cost of the vehicle. He was going to use it in business, but the plan was also to write that off against income outside of particular businesses that he was using it. What I had to let him know, and one thing that folks don't realize when using the 179 deduction, is that you can't use those deductions to create losses in your business. So it can bring your business income down to zero. It can't go below zero. So if your deduction exceeds that, I believe you can push it off till other years. But nonetheless, in the current year, you can't have this deduction to a loss on your business. But with the new bonus depreciation, which is the whole 80% of your vehicle at one time, that does allow you to create a loss. If you're looking for that strategy to use, a vehicle write-off, you want to go with a bonus depreciation, which is 168 versus the Section 179, which doesn't allow you to create losses. So make sure your business deduction isn't proportionate to your business usage. If you use that vehicle for 80% business, 20% personal, then your deduction is limited to the 80%. So that's all for today. It's very quick. So if you have any questions about this deduction, any other deductions, any tax or other accounting questions, feel free to reach out. I'm happy to help. And that's all for now. Talk to you in the next one.